Well, the vice president talked about the issue of foreign exchange management at the just concluded ministerial retreat and possibly the directive from the CBN to the banks to use I&E rates for outbound payments is another reaction to the vice president's speech. Well, the topic actually never left the front burner as the issue of foreign exchange can be connected to almost everything consumed in the country. Some of the questions being asked is, what is the true value of the Naira? Can market forces alone be allowed to determine the exchange rate? Well, we have the Managing Director of Codros Asset Management Limited, Mr. Bolahon Aino, joining us to speak to this. Hello, Mr. Aino. Good morning.
Good morning. Thanks for having me.
Good to have you too. Well, one of the questions have been, what is the true value of the Naira? The Vice President had said that it is artificially low. From your perspective, what would be the realistic value of the Naira?
Interesting question. I guess that's been on the lips of everybody. As what is the true value of Naira? People are asking, should it be the parallel rates or should it be the I&E rates? And quite a tricky question. But I think I'll start by saying I don't think the rate should be the parallel rates. And one is because I think what has driven the price in the parallel rates is one of speculative attack. There's been some loss of confidence among investors and market participants. So a lot of people have been accumulating the Naira. And that's why we've seen the parallel rate, the dollar, and you've seen the parallel rate move to uncharted territory, currently about 575. At the I&E rates, about 410 Naira to a dollar. So I think it's somewhat around there, maybe about 50 basis points or 40 basis points from the I&E rates. But I think the Naira should be around the 400 levels. If you recall, the external reserve has really eaten up the past couple of weeks, going to the SDR and also the successful Eurobond issuances. So really, I think the CBN have a lot of ammunition to be able to defend the Naira, at least in the near term, about 6 months of import cover. So I think the rate should be somewhat around 400 levels, definitely not around 575 levels that we are currently seeing now. I think the conversation should also be what is really driving the value of the Naira, which is the supply-demand dynamics that you spoke about. And for a lot of countries, it's really the attractiveness of their currency to investors, commodity prices, and also inflation, and also balance of trade, for instance. Nigeria has had negative balance of trade, which has impacted really our currency. Our inflation rate is currently very high, and interest rates, people feel they should be higher than that, looking at where interest rates is. So in summary, I would say that the value of the Naira, definitely not the parallel rates. I think that's really speculative. I think it should be somewhere in the 400 levels, maybe a bit more from where it's currently at the moment.
All right. So you think that the I&E rate is more realistic or should be more realistic. But when I mean, I don't know if you heard the story that I read earlier, the central bank directing banks to apply exchange rate from the I&E window for outbound payments through the PAPs. What impact do you think that this should have? Obviously, this is reaction to conversations going on.
Yes, I think what is good for investors is good for people that will be making payments. Because usually when you make those payments from banks, usually like a premium for where the I&E rate is. So that means you're going to spend less to be able to access more dollars. And of course, that also improves the demand for dollars or to be able to access those. So I think it's welcome. I think it's good. I think it's going to bring a lot more confidence in the market, a lot more certainty in the market. I'll mention it again. Really, what is really causing a lot of the depreciation we've seen in the Naira is more fear factor, more of confidence issue. And I think that will instill a lot of confidence into the markets. And that means that the CBN is able to supply dollar at that level. So I think it's going to instill a lot of confidence in the market. I think it's welcome.
Okay, when you say that for you, the fear factor is what is causing what we are seeing, a lot of people will argue with that. I mean, we've had conversations of supply. Do we have enough supply? We've had conversations around pricing. I mean, I remember Dr. Mude Yusuf, obviously, I mean, a lot of times says this, that if the dollar costs as much as it does in the parallel markets, then you have more people willing to bring in what they have into the market. But if you go to the bank and then you have 410, meanwhile, if you want to buy, then you have 577 and something around that, then we have the issue of pricing and not the issue of a fear factor, like you noted.
Yeah, so pricing doesn't exist alone. Pricing is caused by demand and supply. And like you rightly said, it can be that there's not enough supply. It can also be that there's much more demand. And like I said, a lot of the demand is artificial. So it's not that people needed to pay for maybe school or pay for healthcare. This is just people piling up dollars just in case of uncertainty. So maybe the word on the street is that, oh, that CBN does not have enough dollars. But really, that's not the case. Like I said, the external reserve is quite robust at current levels. Oil price has been very stable, about $80 per barrel. But there's a lot of fear factor. Also, when the BDCs were banned, people were just willing to get dollars at any point in time. There's been conversation that there might be embargo on domiciliary accounts. So sometimes investors or the people take it as fear factor, and that impacts the speculative attack. Really, that's what we've seen. So I don't think it's really more of CBN not able to meet demand. CBN has said that they're able to meet every legitimate demand. And I'm aware that people have been getting dollars when they go to the bank, when they have genuine requests. But I have people coming to meet me and they're like saying, okay, they don't mind getting dollars at whatever levels. And it's really a fear factor. People buying dollars at 580 is because they think that it's going to probably reach 600 or even go above that. And if you recall, several years ago, dollars went to about 500, and it was because of this speculative attack on the dollars. And when CBN intervened, we saw it come down back to about 200 levels. So I think it's not so much about supply. The external reserve has grown by about 3 billion in the last couple of weeks, but it's really more about the fear factor.
All right. Well, a lot of manufacturers that I've spoken with will not agree with you. But, I mean, if you say it's speculation and fear factor, how do you think that this issue should be resolved or can be resolved?
Okay, so it's a confluence of factor, and there's a monetary part, there's a fiscal part as well. We've been having negative trade balances, and that means that our exports are significantly lower than our imports. So the fiscal is the environment needs to be enabling, so our goods or what we produce, our services is more attractive or more competitive in the international markets. So we're able to generate enough dollars. So at the moment, we're not able to generate enough dollars. In the past, we used to have robust remittances. Remittance was even more than oil receipts. For a particular year, was about $25 billion in the particular years. So COVID more or less allowed that to erode. So one, we need to be able to attract the dollars into the economy, and that's to do with one, the goods that we sell, also our market as well. So for a lot of investors, they don't like when there is a lot of uncertainty in the markets. So in the NSC, for instance, or the NGX, we have investors that quite FPIs have exited their position, but they're not able to get dollars. So we are not seeing so much inflow coming from the FPIs as well. In the past, that contributed to our reserve position. So, so in terms of exports, in terms of ability to be able to attract remittances, attract inflows from FPIs, those are going to help our reserve significantly.
Okay, well, I guess that's kind of suggests that once we boost our supply, then some of these issues will be resolved. But Nigeria's foreign reserve received a boost of $2.76 billion in the month of September to close at 36.78 billion naira at the end of that month. Can this be attributed to the SDR and the successful Eurobond?
Yeah, rightly said. So the Eurobond is the reserve immediately. So the SDR has been coming in trickles. So it's both, but it's more of the Eurobond. We are still receiving the SDL, and so we still expect the reserve to grow beyond the current levels that it is. So you're right, it's a combination of the two, the Eurobond issuance and the IMF SDR.
And like you also noted earlier, the equities market now has more of local players, you know, than the foreign one. At first, this was applauded, but are we missing anything? Are we losing anything when we have more local players than the foreign ones?
Yeah, so I think it's a mixed bag. And so last year, in terms of foreign participation, they did about 120 billion in terms of foreign participation. But that has reduced significantly. This year, in terms of foreign participation, is just about 21%, while the local have 78.34%. And it's really more of the supply issue. So a lot of them last year were selling, but they're not able to exit the market because there's no dollar. So really the local participation we are seeing is really more of last year, there was a rally in the markets. So beginning of this year, they expected that momentum was going to continue. So we saw a lot of interest from the institutional clients investing in the equity markets. The foreign players are not selling as much as they were selling last year because they're not getting as much dollars. In terms of allocation that they get from the CBN, about 50 million weekly, $50 million, and 25 million is for spots, and 25 million is for dollars, for forwards. So you see a lot of them just sitting on the sideline rather than sell. And for the local participation, we've also seen a lot of big ticket transaction this year. The likes of BOC Gases, Notori, FBN, about 800 million shares were exchanged. Champion Breweries, Honeywell as well, about 400 million shares were exchanged. And this year as well, we've seen brokers taking significant proprietary position for their portfolio. And we've seen some corporate buying back their shares, the likes of Nestle, the likes of Nigerian Breweries. So while the local participation has increased, it's more on the institutional side, not the retail side. And it's not so much about more money coming into the market. It's more of less participation by the FPIs. So I wouldn't say it's a plus. I would say it's a plus if we had a growth from where we are last year, but we don't have a growth. Rather, we have a decline from last year's participation.
And this, I'm sure you would attribute it to what you said earlier, making the environment more friendly for businesses to attract the FDIs.
Absolutely, absolutely. So if the FDIs are able to get dollars whenever they need it, of course, they'll come to the Nigerian market. The Nigerian market is attractive. So in terms of main demands from the FDI, is still about $2 billion, and that is huge. So if they are able to get dollars when they want to exit, I guess it's make the story very compelling for them. So at the moment, the story is not too compelling because they have to wait or buy forward contracts. And really, that also change the dynamics of their investments.
So what, from your perspective now, can bring like a sudden change to this FX space? Because a whole lot of things connect to it. I mean, even in the aviation, we also have that they cannot repatriate their money because we don't have enough, foreign exchange. And so it's really holding back a lot of things. What do you think can be done, to maybe in a short time at least change the story in that space?
So I think it's a collective effort. And I know oftentimes everybody just wants to look at CBN, but is everybody really? There's fiscal side, there's monetary side, and there's the populace as well. Nigeria, everybody has affinity for foreign goods. And of course, that is one of the reasons why we have huge demand. In terms of the inflation index as well, there's the import element that is quite high. Everybody wants to school abroad, everybody wants to access good healthcare abroad, and really can't blame people. Really, they have better healthcare abroad. So it's a whole lot of things. So one, I guess, for the populace, in terms of our affinity for foreign goods, I guess we need to start shifting towards local consumption. It's not going to happen in a day. I guess we just need to start doing the right thing. We need to make our goods more attractive, and that has to be from the fiscal side. So access to credit, having good electricity, that makes our goods more cheaper on the long run. Good at healthcare as well. So money that are spent going abroad to access healthcare in India, they are spending it locally, and really that reduces demand. Money that are spent on education, they are spending because you have good education system in Nigeria. So it's a whole lot of things. And also people not just speculating on Naira. One, you wouldn't blame people too much because everybody wants to have positive return on their investments. And over time, they've seen how the dollar has performed by the Naira. So I guess investors are usually rational in their decision making. And that's why you see people just sitting on the pile of dollars they don't have any need for. Also, you see people going to parties spraying dollars as well. All these have huge demand or effect on dollar that is available. So it's a whole lot of things. I don't think it's just a CBN responsibility. CBN is doing its bit. Fiscal authorities are doing their bits. I think everybody just needs to play their part. And like I said, it's going to take time. For most economies, it's really like a managed float. It's not just a floating exchange rate regime. For the developed economy, most of them do floating exchange rate regime. But about 170 countries really have managed floats, and that's about 80% of the total countries that we have. And that's because they don't want their exchange rate to be very susceptible to what happens in the developed markets, to reduce volatility. So from time to time, they maintain a rate, but from time to time, the CBN tries to intervene. So I guess over time, we'll get it good enough that we were able to succeed with the Eurobond issuance. That's going to bring about stability for a number of months. And let's just see what the CBN does in the next couple of months.
All right. Thank you so much, Gulaho Aino, Managing Director, Quadros Assets Management Limited, for sharing your thoughts with us this morning.
Thank you for having me.
So after the break, we'll go to a commodities market space, and we'll be talking about the personal elements in that space. Do stay with us. It's Business Morning on Channels Television.